Tracy, I want to start with you here because there are a lot of people trying to look for some parallels between the AI frenzy that we're seeing today and the dot-com frenzy, if you will, that we saw back in the late 90s and early 2000s. Are you finding that parallel?
Yeah, I mean, there is no doubt that we are going to see shades of .com in some of the enthusiasm around AI. I mean, I was looking at Nvidia's valuation before I came on here. I think it's something like 42 price to sales at the moment, which is a lot. And we have seen some companies already start to pivot towards AI. So, of course, a lot of the crypto players that aren't doing so well at the moment are now talking a lot about this new technology. The one difference, I think, I was actually at an event with Mark Baribeau, PGIM's global equity head, this week, and he was talking about the difference is a lot of the AI winners so far are incumbent companies. They're
Hmm.
places like Nvidia, places like Microsoft. These are real companies with actual revenue. And from that perspective, we are in a different place to say 2020, 2021, where people were betting on the really speculative stuff. I know it's a low bar, but it does bear mentioning that to some extent, these are people betting on already incumbent established companies.
That's a good point. And Sonal, I want to get your thoughts on that, particularly just in the context of investor sentiment and really this idea that there does seem to be a lot of folks out there who really sort of want to, I guess, grab on to that next big thing. And at least for right now, it seems like it might be AI.
It does look like this is going to be the decade of AI, really. If you think about the last decade as the decade of mobility, if you look at the 2010 to through 2020, I am not an equity specialist. I always make that case, but I do think that this decade that we're in right now is likely to be the decade of AI. I'm not the person to pick individual stocks, clearly. I'm the last person to do so. But if I look at the technology, it is something we're very excited about. Having said that, there are many other technologies, whether you're looking at what's going on in the field of medicine with genomes, there's a lot happening in technology more broadly. AI is very much the flavor of the month. So that is the element which goes back to what we were talking about, the dot-com, to some extent, I'd say.
Absolutely. And Tracy, I mean, you bring up a good point here about kind of these established players, the NVIDIAs, Microsofts, Alphabets, proven companies with relatively solid balance sheets here. But there is certainly some froth in this as well, sort of a lot of second and third tier companies that have mentioned AI. Your colleague, Joe Weisenthal, the co-host of Odd Lots, I thought had a great point when he talked about Kroger, a grocery store chain where the CEO mentioned AI 8 times on the conference call. I'm having a hard time making that connection, but I don't know, maybe they know something we don't.
I mean, look, I do think there is a danger here that everyone starts using AI as basically a synonym for every type of software that's currently in existence. I can see that happening. However, when it comes to the Kroger earnings call, sure, he said AI 8 times, but the stock still went down, which to me suggests that people are still being somewhat rational about this. That said, there are plenty of pockets of irrationality in the market. So there's something called the bubble portfolio that
Hmm.
GAM portfolio manager Paul McNamara put together many, many years ago. And it contains a bunch of stuff like Tesla, Netflix, Chinese tech companies, real estate developers. That thing has shot back up, I think something like 30% so far this year, which is about double the S&P performance. So clearly people are piling back in to some low quality names. That said, a lot of those names are coming off of significant lows. So what does it mean if a company goes from, $10 to $20?
Yeah.
That's a doubling of performance, but it's still relatively low compared to prior history.